Morning everybody, Usd Jpy there, DRFX Forex Swing Trading. This is a quick update on the situation taking place on the US dollar Japanese yen. As you recall from the last video I did, I expressed some concern about the ability of this pair to continue bullish despite the strong bullish candle that appeared above the range setup that we see here. And as we're now seeing, the market is actually pulling back bearish as expected based on the concern that I had with regards to the setup on the 4-hour chart. The reason for this related to an aspect of trends and when trends tend to come to an end and become volatile. There are several reasons that based on the theory of trends and how they are structured that can tell us when a market when a trend, whether it's a currency or an equity or a stock or an indices or an index, that can tell us there are certain patterns of a trend that can tell us when it is expected to come to an end and when we should actually exit the market for profit, or whether we should avoid entering altogether so that we avoid being caught in a pullback that is about to take place. So when this bullish candle appeared above the resistance, on the face of it, it looked like a very attractive prospect to trade as it moves towards its resistance boundary of the larger consolidation setup. However, one always has to take a look at what is behind that signal. To take a look under the hood, for want of to use a popular expression. So this is what we had to do here. And having seen that technical aspect on the 4-hour chart, I realized that it would have not been a very wise move to enter long um, in this direction. So as we're now seeing, that expected pullback is now taking place. So what is the likely scenario for this pair over the next couple of days? Now, there is a possibility that we could still have a bullish move that takes us to the resistance and possibly even breaks out higher to start a major breakout in favor of the US dollar. The market could U-turn, test this resistance boundary, which is something that tends to happen when we have consolidation breakouts. It can test this boundary and then U-turn and provide another bullish signal that carries us up to this area here and possibly to break up higher. On the other hand, we could have a false breakout reversal starting, which would take us below this resistance and carry us back down to the support area of the larger consolidation setup. So short term, those are the possibilities that we could see happen for this pair. A U-turn and a rally that takes us here, and a continuation of this bearish move back down to the support area at the 119.18 area. Now, long term, if we see the market rally and break this boundary with a strong bullish signal, then what it would signify the start of a significant or continuation of this major uptrend that has been in place since 2012. On the other hand, if we were to see the market reverse and coming back down to the support and then break these uptrend lines, the outer uptrend line and then the long-term uptrend line, then we are likely to be seeing a significant reversal in favor of the Japanese yen over the long term. So this is a situation that we're seeing in terms of the pair over the long term. So depending on what takes place in the short term over the next few days will determine the ultimate direction for this pair over the long term. So let's be patient and take a look at and wait to see what takes place, and hopefully there will be some trading opportunities for us in either direction. Alright, take care.